Okay, the figures have just come in. It's actually lifted to 3.5%. So the unemployment rate has ticked up very slightly in the month of August to 3.5%. I'll just have a quick look at the ABS's website here for a bit more info. I'm just refreshing the page now, but obviously it's come in slightly more than expected, 3.5%. The Bureau of Statistics says employment increasing by 33,000 people and unemployment by 14,000. The unemployment rate rose by 0.1 percentage points, returning to the same rate as it was back in June. The participation rate, as we were just talking about, that's the number of people either in work or actively looking for work, that lifted to 66.6%, consistent with the increase in employment and unemployment. It says the participation rate's now 0.2 percentage points below its record high in June. So furthermore, we've got some additional working hours as well. Seasonally adjusted hours rose by 0.8% in August. So there are more people working, Tom, during the month of August. So, look, the numbers are clearly...
Sorry, as you alluded to, participation rate goes up and that's why the unemployment number goes up, as in more people want to get a job. Full-time employment increasing by 58,800 and part-time decreasing by 25,000. So a couple of things going on there. The total number of jobs added to the economy about 33,000, but crucially full-time, which is always points to that stronger jobs market, has gone up significantly. So in terms of cash rate hikes, Ed, on those sorts of numbers, the RBA will have a little bit more licence, I guess, to have another crack at a 0.5 or 2?
Yeah, look, Tom, I think they do have a chance at lifting rates again by another 50 basis points. Look, the Governor of the Reserve Bank spoke just a week ago at the Annaka Foundation, trying to suggest that the cash rate rises from here on in would be lower than 50 basis points, potentially 25, 25 and 25. Look, we know the cash rate, though, is still going to keep rising to probably around that 3.5% mark, and we're only at 2.35% today. So the next board meeting is in 2 weeks and they'll make their decision then. But figures like this showing how tight Australia's job market is going to be feeding very closely into that. We're actually going to hear from the Governor, Philip Lowe, tomorrow. He's appearing before this parliamentary committee in Canberra. He's got a 3-hour appearance. It's every 6 months he appears before Parliament. So he's going to be expect him to be asked a lot of questions around the cash rate and around the jobs market and where he sees inflation going in Australia.
Yep. 60 billion, of course, wiped off the stock market yesterday. That was mainly around global inflation concerns. Up slightly this morning so far, though?
Look, it's up slightly this morning, up by about 0.4% in early trade. But the market lost $60 billion yesterday. It was down about 2.6%. It's all with basically fears about US interest rates. Potentially, the US Federal Reserve may need to lift rates by 1% next week. Their cash rate decision is next Thursday. So that caused stock markets around the world to plunge yesterday. We've started to bounce back a little bit this morning, but we're nowhere near back to the level we were on Monday. So the market's in recovery mode, but I think it's going to be quite muted share trading over the next week until the US Federal Reserve makes its cash rate decision. So that's the big event economically that the whole world's waiting for, Tom.
And that 7,000 barrier is such a psychological one. You feel it's been chasing it for 15 years and to stay steadily above it. Ed, thank you.